Hello everyone, and welcome back to the Mortgage Rundown. Today we're going to talk about interest rates and inflation. Over the last few weeks, we've seen the Fed speak more hawkish about the possibility of a third interest rate increase in 2017, likely in December. In fact, the market has priced in a 78% chance that the Fed raises rates in December. That's more than twice the probability less than 30 days ago. Now, while the market has to respect a more hawkish sounding Fed, will rates move higher as we close out 2017? Certainly if the Fed raises rates, then we will see short-term rates move higher, but long-term rates are likely to remain unaffected. Why? Take a look at the chart on your screen. This is core PCE, which is the Fed's preferred inflation measurement over the last 5 years. As you can see, it continues to fall, and in August, it dropped all the way down to 1.3%. That's well below the Fed's 2% inflation target. Low inflation means longer-term rates may not move higher when the Fed raises short-term rates. But the Fed is stuck to their guns, the Phillips curve. What is the Phillips curve? In essence, the Phillips curve shows the inverse relationship between unemployment and inflation. So the lower the unemployment rate, the higher the rate of inflation. Whether it be next month or next year, the Fed believes this relationship at some point will hold and inflation will move higher. Why else would they announce plans to reduce the balance sheet and raise rates again in 2017 when inflation has been non-existent? Take a look at this graph. This shows both the unemployment rate and inflation since 1970. As you can see, there has been correlation between the two until about 5 years ago. Note most recently that as the unemployment rates drop, inflation is also dropping. That is not supposed to be happening, and yet the Fed still wants to raise rates and shrink the balance sheet. In the coming weeks, you should keep an eye on the following items. There is some inflation data via CPI and PPI this week. This argument on whether the Phillips curve really applies to the economy today. And lastly, any further comments from the Fed in terms of policy for the remainder of the year. Will they or won't they raise rates in December? If you'd like a more in-depth analysis, please visit our blog. Thanks for watching and have a great day.